Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. All of these videos are short updates to tell you what's been happening in the economy over the last month. And these updates follow on to the feature-length video that we put out almost 2 years ago to let you know what's going to be happening in the economy over the next decade. That video is really important. If you haven't watched it, there's a link to go watch that for free next to this video. I really recommend that. Today's video is going to be second of 3 focusing on the U.S. economy. So let me jump into that. Employment figures you probably heard come out, even the doctored ones. I mean, they really doctored these numbers, but even doctored, they came out horrible. We had a report here a week or 2 ago that was the worst report. I think it was the worst report in like 50 years, but there was actually absolutely 0 new jobs created. On a net level, of course, some jobs are created, some jobs are lost, and that's the net. Social Security disability applications are up nearly 50%, so people can't find work, so they're claiming disability. And so, again, the government's shelling out more money that it doesn't have because people are desperate and looking for something. The government creates these situations with the economy by trying to manipulate everything and then gets in the situation of having to bail people out. Sales of U.S. homes, the lowest in 5 years. Mortgage applications cratered 10% in August's 12th week, and we're down 3 or 4 weeks at that time. So some of this news that I have in my stack is a little old, but that's a very bad situation for the real estate economy. The real estate market is heading down again. San Francisco Fed issued a study that foresees stocks being down until 2020. So this is the San Francisco Fed. This is the Federal Reserve. And they see stocks going down for 10 more years. And their main determinant of this is population. I remember about 10 years ago telling clients, Harry Dent had a study at the time. I was enamored with it. It seemed really strong, and it worked decently well perhaps. But saying that the market would be going up until 2007 because of the baby boomers being in their prime earning years, but after that it would start declining. Well, the San Francisco Fed is basically using that same data to determine that they believe stock market prices will be down for 10 more years. Will go down from here. But the good news is they really think stock market will really start rolling in 2025, so you'll be in good shape then. There's a lot of hoopla recently over Warren Buffett investing in Bank of America and how patriotic he was. He got a deal that you can't possibly get. He got warrants and a lot of sweeteners into his deal that you couldn't possibly get. You can't go online and get the kind of deal that he got for himself. Even then, there's no way he can possibly know everything that's on the books of Bank of America. There's probably not any person alive that knows that. It's way too confusing. It's way too difficult to know what the assets of Bank of America are worth. So a large part of his thinking has to be that the government is going to bail him out, and that that's going to be the way that he makes money on the deal. I think that he'll probably lose money on the deal, but that's not patriotic to think that the government's going to bail him out. So it's weird that he's getting a lot of credit for that when it wasn't that long ago he was shorting Bank of America stock. So John Lohman study shows that the collapse in the real-time economic data over the last 3 months is the sharpest in history. That should wake you up. California bill to regulate babysitters. The Californians want to regulate all household staff, so you have to give them all sorts of benefits, breaks, all sorts of things to people like babysitters. In California, I don't know, a few months ago, came to Texas. I'm in Austin, Texas, and they came here and they're trying to figure out why the economy is doing well here when it's doing so poorly there. And yet they go and they pull stuff like this. They're absolutely out of their mind. They have no idea how economics works. When you make rules like this, people either have to break the rules, which I imagine most people are going to break the rules, and they're going to pay the local kid down the street their, whatever they pay their babysitter to work for a couple hours. They're not going to sign up benefits and do all that kind of crazy stuff. So that you turn them into lawbreakers when all they are is regular people trying to live regular life. You make them lawbreakers by passing this kind of law. And then the people that are really serious about not breaking the law, well, now they just can't go out to eat. And so they don't go out to eat, so they don't support the restaurant. They don't give money to the babysitter that was the only job that person could really get to earn what they were earning. So now they're not getting money. They're killing the economy. This is the way that the people that run California think, and unfortunately the way that many people that run this country think. That kills the economy. That's why we're having a lot of problems that we're having. But I don't know, they don't understand this somehow. Goldman Sachs put out a secret report to top clients that says the opposite of what they tell most of their clients. So they have mass distributed reports that most of the people that work with Goldman, they're excited. They're working with Goldman Sachs, the smartest company on Wall Street. So they must be doing well, right? Well, no, Goldman tells them one thing, but they put out other information to their very top clients, hedge funds and people like this. But it got leaked, and what they're saying to their top clients is very different than what they're saying to most of their clients and to the press. And it's pretty eye-opening. They think that we're in some deep trouble economically. Again, same thing we've been saying here for quite a while. They said, well, they're saying publicly, oh, don't go to Swiss franc, that's bad. And so the private clients are saying, move to the Swiss franc because it's safe. This is before the Swiss franc decided to devalue itself. European banks need $1 trillion in bailouts, they believe. China's growth is not sustainable. So these are two massive fundamental questions in the air for the world economy and whether we're in deep trouble or not. So Goldman Sachs, the smartest bank on Wall Street, their private information is both those answers are bad, negative, we're going to be in trouble. And they said the U.S., which is trying to solve its debt problem with more debt, that's not going to work. Again, these are all things we've been telling you here, but it's good to see that the smartest bank on Wall Street has come along and agreeing with what we've been saying for a while. Even if that's not what they tell most people publicly, that's what they're saying privately. Thank you for watching this. I've got one more video on the U.S. economy. And again, if you haven't seen the Coming Storm video, there's a link to do so for free right near this one. Thanks.